The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. And joining us now for conversation as we take a look at what's happening in the markets. Obviously, a lot of headline risk with tariffs and more. That's a big topic of conversation here through the weekend and starting off the week in the trade. Jim McCormick with agmarket.net joins us for a conversation here at the agmarket.net Farming for Profit, Not Price Conference in Nashville. Jim, it's good to see you, buddy. How are you?
It's great. It's great to be down in your territory. Normally, we're talking via video, so it's great to be in the city of Nashville.
Absolutely. And you guys, a great crowd for the conference here. And I know this is year 3. We've had the conference here in Nashville, if I remember correctly.
You nailed it. Year 3, and yes, we have a record attendance, so we're very proud of it. There's a lot to talk about. I mean, we were joking. I mean, we figured what better place to start a trade war is the weekend of the agmarket.net conference. I mean, that's we President Trump timed this perfect with it. We appreciate him doing that. He announced that over the weekend, and we kicked off our conference Sunday afternoon, and woke up with a lot of volatility. And I think Jesse, that's what we're going to see over the next couple months. I mean, it does sound like as we're doing this, we've at least kind of come to maybe I'd call a pause, maybe a ceasefire between us and Mexico, Canada. We'll see, but there's going to be a lot of water to go under this trade war bridge, I fear, over the next couple months and years.
Very true. Well, and case in point, we opened the markets lower Sunday night. We kind of expected that. It wasn't a sharp move. I think it was a gap lower in corn, but then, we got into Monday and the talk of maybe, we're going to hold the phone here on implementation, et cetera. I mean, grains just took off on a nice rally. I just think about this, the headline risk and managing your risk in these markets is probably what's going to be the big key thing here with all the uncertainty.
Well, that's definitely what it is. I mean, that is the reality is, the first round of President Trump's administration, we saw a lot of uncertainty. He likes to surprise the market. He likes to make announcements over Twitter or X, and that's going to add a lot of variability to it. And, when you look at where we are going into the spring and summer type situation, it's very interesting compared to a year ago. A year ago, the farmer was holding massive amounts of grain. The commercial had hardly any inventory on hand. It is 100% 80-degree flip right now. The fund is carrying over 300,000 long position. They're near 100,000 with a record long. The opposite side is commercial. Jesse, the commercial is carrying one of the biggest shorts he's carried for the third week of January. So what that tells me is a producer, he's down about 30% less to sell. I don't see him selling that corn the 4th of July weekend. We had Eric Snodgrass speaking at our conference, and he was talking a little bit, there's models that are a little bit uncertain. Summer weather is always a question, and that's going to allow the producers, I think, to hold back a little bit of bushels, those final 30% to sell. On the other hand, our commercial industry we've got a lot of commercials here. What they're telling us is they've got all their needs covered probably the 4th of July weekend if on out. So, the commercial, I don't think he's going to be there to buy the dip aggressively. The farmer's not going to be there to sell the rally aggressively. It's all up to the funds. Are the funds going to just keep adding length and driving this market higher? And if, we get positive news flow, that could happen. But if you start getting a negative news flow, I think the reality is you can see the funds part of that position back just as quick. So, they're going to be the lead dog of this, this sled ride near term.
I think about the fund position too in corn. I mean, it's been a grind higher here in corn, and yet, lead month March, we haven't put a 5 handle back on that futures contract quite yet.
Exactly. And part of the reason why was because as that market was gone, we've seen this massive, from a record short to, long 300,000, a huge reversal. But the reason why you didn't see that 5 handle, Jesse, is there was a massive amount of farmers selling into that rally. Because remember, up to that January crop report, the argument in the industry was we have plenty of corn. So the producer has been aggressively selling into it. Now the report surprised everybody. Lowering the crop 3.6 bushels was definitely a surprise to me. And I think the industry as a whole, due to the fact that we had about 91% of the crop harvested by the November WASDE report. So to see a hard adjustment for the final 9% being harvested was kind of a strange adjustment, and it caught people. So that's also why it's going to be interesting. So that's what I was pointing out. So if the funds really want to start buying into it, there is not going to be that that natural seller to kind of limit that rally. And it could get exciting, especially if the safrinha crop gets delayed planting. Weather issues, let's say we have a wet spring. I personally think we're going to push 95 million acres of corn getting planted this year. That we planted 94.6 million just 2 years ago. So we're just swinging back to those acres, plus the profitability is in the corn. But weather's got to cooperate. If we end up with a wet spring, which is hard to think right now because it's been a very dry summer. I think Florida's had more snow than my house outside of Chicago. Heck, you might have had more snow in Nashville than we've had in Chicago. But we'll see if the spring weather delays that as an acreage adjustment. But right now, we can see some big acres, big crop prices go down. On the other hand, if the acres don't get planted, the world supply is tightening up a little bit. It could get interesting.
I wonder, too, with all this tariff talk, and I think specifically maybe some differences from when we saw this the first go around in the first Trump administration. I think about soybeans and the U.S.-China relationship. There's more soybeans in the pipeline, the world pipeline now than there was back in 2018. So I wonder if that could make a difference here in this broader market picture when you look at soy, Jim.
I think it's definitely going to be a little bit more challenging. I know there's a lot of people thinking we're going to get that grain trade 2.0, that Trump negotiated at the end of his last term. World's changed quite a bit. Brazil's production has just been ramping up massively. Right now, Brazil has a normal crop, and right now we're thinking it's going to be a 170, 171 crop. It's going to be a big crop. It'll more than offset some lost production in Argentina. World supply is going to be there. And then in general, we saw an economist speaking at the conference that was pointing out the Chinese economy is slowing down. So you've got a slowing down economy, a world supply building. I just don't know if President Trump's going to be able to get the Chinese to be that much more aggressive buying a product they just don't need. And remember, Jesse, the tariffs that Trump put on are still in place. And in certain instances, Joe Biden added to some of these tariffs. Now, President Trump put tariffs on China over the weekend, and China didn't push back. It's kind of interesting. Essentially, Mexico tried to push back pretty hard. Canada says it's going to push back. China kind of took a different approach and said they're just going to kind of wait and complain to the WTO at the moment. But that may be a situation, where it's just different type of politics of how they want to play the game. Because, remember, we've only had President Trump as president for 2 weeks. So there's just a lot of balls in the air right now that it's going to take a little bit of time to digest.
And I think, too, obviously the outside markets can play a role in the ags. And we've seen plenty of fireworks there in the stocks and the dollar and crude oil from the Sunday night open into Monday's trade. Anything big for you that you're watching in the outside markets that farmers and ranchers need to pay attention to?
Well, I think you got to, I think you just look at the overall psychology of the marketplace. I mean, tariffs are, fact of the matter, are taxes. So if they do raise the tariffs, it's a big tax on the American consumer for all those products coming in. The whole theory behind tariffs is to get the consumer to essentially quit buying that foreign product and maybe buy domestically. The problem is a lot of the stuff will be tariffing. There is no alternative. So it's a tax. And then, so it's a psychology of how this all plays out. The other thing we're going to look at is beef. Everyone knows, man, the beef market's been on one heck of a tear. I mean, I like to say, you know what? I'll be dang. I guess cows can jump over the moon because holy cow, these prices are just sky high. But now, the question right now is we've got a short supply. That cattle inventory, that biannual cattle inventory shows what? The tightest herd in 40 some years, 50 years. So the supply is tight. It takes a long time to build up the cattle herd back up. So the real question right now, I think on the macro picture in economics is how far do they got to push the cattle price and the beef price up before they get the consumer to say enough's enough. I can't afford it. And I think that I don't know where that's going to come. It's held in there better than I think a lot of people thought. But I think if you're looking at that, stock market starts to weaken a little bit. The stock market gets a little bit more jittery. Consumer sentiment kind of rolls over. Those are the keys you want to watch, folks, to say, hey, look. And if that does, if I'm a producer of livestock, I start thinking at least buying some puts just to make sure what happens. Because the one thing I've been doing this for 30 years. The old line is, it is an escalator up in the beef prices, and it is an elevator shaft down when it goes, when you hit the level. If, like I said, we're in a cease war possibly right now as we record on the tariffs, but if we start getting tariffs, Mexico takes a lot of pork. Does it make our pork more expensive? We're trying to get beef cattle or, that beef cattle across the border due to the screw worm.
Yep.
they're about ready to open the border. We put the tariffs on; those cattle become 25% more expensive in theory. But that got all paused. So those are a lot of uncertainties. But like I said, I think the real crux is the consumer. Is he going? How much is he willing to pay?
Good perspective as always. Jim McCormick with agmarket.net. Thanks for having me down here at the conference again. Great to see you, and I know we'll talk again real soon.
Thank you for doing. I'm going to make a plug, Jesse. Thank you. You also serenaded us at our cocktail party. We had a great review. So if anybody's looking for some, entertainment, my man Jesse, do not be afraid to call him. He does a great job. Thank you. We really appreciate you being here at the show and as well as performing at our cocktail party.
Well, thank you for the kind words. And again, do appreciate it. Jim McCormick, good to see you. Thanks for joining me.
Thanks for having us.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.